We're diving deep into Palantir's Q2 2025 earnings, and the numbers are nothing short of phenomenal. They reported revenue of over $1 billion for the first time, hitting 1.004 billion, 48% jump year over year. What's even more striking is their GAAP profit, with earnings per share at 0.16, nearly doubling from a year ago. This isn't just adjusted funny money, it's real profit.
You're absolutely right. This isn't just a good quarter, it's a transformative one. The fact that they've finally achieved consistent GAAP profitability is a game changer for a company that was often criticized for burning cash. It signals a fundamental shift in their business model, moving from a pure growth play to a sustainable, financially sound enterprise. This profitability, combined with their aggressive guidance for future growth, suggests a company that has truly found its stride in the AI era.
That GAAP profitability is indeed a critical milestone. But beyond just the numbers, what does achieving this real profit status truly signify for Palantir's long-term trajectory and its standing within the tech industry, especially given its history?
Well, for years, the knock on Palantir was that it was this secretive, cash-burning government contractor that couldn't crack the commercial market or turn a real profit. Achieving GAAP profitability shatters that narrative. It proves their model is sustainable, and the engine behind it is clearly their new artificial intelligence platform, or AIP. They signed 157 new contracts worth over $1 million each, and their total contract value shot up 140% to over $2 billion. This shows their AI story is translating directly into cash, moving way beyond just hype.
This move to sustain profitability clearly validates Palantir's strategic pivot and its AI offerings. Now, let's turn our attention to the specific engines driving this growth, particularly how their unique position in the AI landscape is attracting new clients.
Got it.
Looking at the growth drivers, it's clear the US market is absolutely central. US commercial revenue shot up by 93% year over year, and their traditional government segment also saw a strong 53% jump. It seems Palantir is leveraging its deep government trust to attract a wave of new commercial clients, particularly through their AIP platform, which offers secure AI deployment.
That's precisely it. Palantir's unique selling proposition lies in its ability to handle extremely sensitive data, something it perfected with government agencies. Now, as corporations rush to adopt AI, they're facing massive data privacy and security concerns. Palantir's AIP allows them to deploy powerful AI models on their own networks, giving them control and security. This is particularly appealing to industries like banking and healthcare, where data integrity is paramount.
If we put ourselves in the shoes of a CIO at a major bank or hospital, grappling with the complexities of AI adoption and data security, what specific aspects of Palantir's AIP or its unique background would make it a compelling, almost indispensable choice over other emerging AI solutions?
It's the difference between using a public service and having a private, fortified vault. With most other AI solutions, you're sending your sensitive data out to a third-party cloud to be processed. For a bank, that's a non-starter. Palantir's AIP essentially lets you bring the AI to your data inside your own secure network. Your customer information, your proprietary trading algorithms, they never leave your control. It solves the single biggest hurdle for AI adoption in regulated industries. It's not just a feature, it's the entire foundation of trust.
So Palantir's growth is clearly backed by a robust product and a unique market position. However, this success has also led to a stock valuation that's raising eyebrows and sparking a heated debate. Let's explore that next.
It's a pretty wild debate.
Palantir stock has been on an absolute rocket ride, climbing around 500% from its lows over the past year, reaching a peak market cap of roughly 430 billion. But with this kind of surge comes the inevitable valuation discussion. Its PE ratio hit an astonishing 588 times trading earnings, which is orders of magnitude higher than the SP500 average or even other leading tech firms.
That eye-watering P/E ratio is precisely where the bubble debate begins. While Palantir's recent performance is undeniably strong, its market valuation seems to be pricing in a future that's incredibly optimistic, possibly even bordering on euphoric. This kind of disconnect between current fundamentals and market cap often catches the attention of seasoned short sellers who see it as an opportunity.
You mentioned short sellers, and Andrew Left of Citron Research famously called Palantir's valuation unhinged from reality, suggesting a massive downside. How does a company with such impressive, tangible growth figures and a unique market position end up facing such a harsh bubble assessment from a prominent market skeptic?
Because the argument isn't about whether Palantir is a good company, it's about whether it's worth its astronomical price tag. Left's point, and it's a powerful one, is based on relative value. He quipped that if you valued Palantir on the same multiples as a genuine AI pioneer like OpenAI, its stock should be about 77% lower. He was suggesting a target price of around 40 when the stock was trading at 170. He's essentially saying, yes, the growth is real, but the market's enthusiasm has created a hype premium that has completely detached the stock from its underlying financial reality.
The tension between Palantir's undeniable operational success and its lofty valuation is palpable. This leads us to the crucial question: can the company sustain this momentum and eventually justify its current market premium amidst a rapidly evolving competitive landscape?
That is the multi-hundred-billion-dollar question.
The bullish narrative for Palantir centers on its unique dual advantage, deep government trust, and cutting-edge AI tech, positioning it as the AI operating system for enterprises. CEO Alex Karp even called Q2 a once-in-a-generation, anomalously good quarter. However, sustaining 50% growth on a 4 billion base is incredibly challenging, especially with tech giants like Microsoft, Google, and Amazon, plus countless startups all eyeing the same enterprise AI pie.
That's the core tension. On one hand, Palantir has a truly unique asset in its government relationships and its proven ability to handle hypersensitive data. This isn't something competitors can replicate overnight. On the other hand, the AI market is becoming fiercely competitive. A key concern analysts have is that its international commercial revenue actually dipped by 3%. Its growth is overwhelmingly US-centric. To justify this valuation, it needs to prove it can win globally, not just with Uncle Sam.
Given the competitive landscape and Palantir's historical reliance on big deals, they're trying to shift towards more standardized products to reach a wider market. Can you offer an analogy to help us understand the scale of this challenge and what it would take for Palantir to become as ubiquitous as, say, Microsoft Office or AWS in the enterprise world?
I think a good analogy is a world-class Formula One engineering team deciding to build a car for the general public. For years, they've built the most sophisticated, high-performance custom machines for a single client, the race team. That's Palantir's history with huge government contracts. Now, they want to sell a car to everyone. They have incredible technology, but can they translate that into a reliable, user-friendly, and affordable Toyota Camry that millions of people will buy? It requires a completely different mindset, a different sales model, and a different support structure. It's a massive strategic pivot from bespoke solutions to standardized products.
So, Palantir's future success hinges on a delicate balance between leveraging its strengths and adapting to a dynamic market. Ultimately, it's a fascinating case study of how innovation, market hype, and fundamental business realities intersect.
That's a perfect way to put it.
So, if we boil this all down, it seems we have a few key takeaways. First, Palantir has hit a major inflection point. They're not just a promising tech company anymore, they're genuinely profitable, and their AI platform is clearly working.
Exactly. But that success has created this valuation paradox. The stock price reflects a massive hype premium, creating this intense debate about whether it's a miracle or a bubble, completely disconnected from today's financial reality.
Right, and their whole future now depends on justifying that premium. They have to keep up this incredible growth, expand beyond the US, and fight off the biggest names in tech. Palantir's journey encapsulates the quintessential modern tech narrative. A company with deep, specialized capabilities finding its moment in an emerging technological wave, igniting both fervent optimism and sharp skepticism. It forces us to ponder, in an era of rapid AI advancement, where does the line truly lie between visionary innovation that justifies extraordinary valuations and speculative exuberance that outpaces present reality? The story of Palantir, therefore, is not just about a software company. It's a powerful lens through which to examine the collective psychology of the market's pursuit of the next big thing and the inherent tension between technological promise and the exacting demands of sustained fundamental value creation